Welcome back. You're still tuned into Midcap Radar. Well, there's been an update that we got last evening. Resident Indians can now open foreign currency accounts at Gift City under the liberalized remittances scheme. Forex accounts can be used for all foreign current and capital account transactions as well. What is the impact on you and me? To discuss this and more, Naveen Mathur, Director of Gift City, joins us now to explain this. Mr. Mathur, good afternoon. Thank you so much for joining us. That's the first question, really. What is the impact of this move for any normal resident of the country?
Thank you very much, Sonal. Good afternoon to you and the viewers too. It's a great move, actually. It means till now, what used to happen is that you are remitting money through LRS from your Indian account to the Gift City, and therefore you were only allowed to do the transactions for the equity markets without any derivative transactions. What has actually happened with this particular notification is now within the $250,000 limit on the LRS, if you have an FC account or the FCI account, which is a foreign currency account, you can use this particular account, as you rightly said, for the current and the capital account transactions, not just in IFSC, but for the other jurisdictions, the foreign jurisdictions which are outside India. The major change is that apart from equity, now you can use this particular remittance or the account which is held in IFSC jurisdiction. The Gift City IFSC jurisdiction can be used for the wider range of purposes. Now you can leverage, means you can send the gifts to your friends abroad, you can buy the properties, immovable properties, you can buy insurance, even you can do the fixed deposits with your account in the foreign currency. So you actually get benefit with respect to hedge for inflation and particularly with depreciation of the US dollar. So it's a great move making I would say a step forward for the GIFT IFSC in comparison to the other international financial services center across the world. So it's a great move by the RBI, opening up various avenues for you to use the money held in the Gift City foreign currency account for the purposes as I mentioned earlier. Sonal.
Mr. Naveen, you just mentioned earlier there used to be a limit on what you could actually hold in this particular account. So when you're comparing it to that, right now, is there any limit, or are you free to hold as much as you want? And number two, what are the other key differentiations between what is allowed now versus what was allowed earlier?
See, the major differentiation, I'll come to the second point first. The major differentiation is that you are not just, you can use this particular account not just for the equity purposes. It means the derivatives were not allowed earlier too. And it seems that it is not the case even with the current notification. Still need to read through in detail. But what I would say is that restriction still applies. The benefit is that you are not just limited to equity. You can use that particular money for various products within the Gift City IFSC jurisdiction, and even for the foreign jurisdiction. Foreign jurisdiction means you can use those funds for other countries and the products and financial services for other countries too. As far as the limit is concerned, that still remains at $250,000 through LRS to be used for this particular account, because IFSC, we should all understand, the Gift City IFSC is a foreign jurisdiction. So you need to use the LRS route to transfer the money to the foreign currency account in the IFSC. You can hold the money for 6 months only, as what it is. What we understand as of now is that 6 months is the limit where you can use this particular money. Otherwise, it has to be remitted back. So this is the 6 months limitation, I think, still remains. And the purposes, as I mentioned, are all current and the capital account transactions, including the travel and the educational loan purposes, whatever you have taken for your kids to study outside even for the IFSC jurisdiction.
Got it. You actually answered my next question. I was going to ask you, is there, again, a time period limit? If you don't utilize those funds, do you have to, take it back? But Mr. Mathur, you spoke about how it can be used for education, it can be used for healthcare, for other purposes. The big talking point during budget was that tax collected at source for foreign remittances. Does that still apply to this? What happens to people with high transaction values in foreign accounts?
I think it doesn't speak about, the notification is just 1.5 page of a notification. It doesn't talk about anything on the taxation. I think so, therefore, it is implicit to understand that the taxation regime still remains the same as it was earlier. Only thing which has changed is the instruments which you can use from that particular account, the financial instruments which you can use from that particular account, which has changed drastically, I would say. And I think it's a great move for the IFSC to be seen as a comparison to the DIFC or the Singapore or the London City of London or so.
Mr. Naveen, in terms of convenience, of course, this particular move is very important. Also, do you see any kind of savings, if in terms of actual transaction cost that will transpire in case, there are people who come and, use this particular facility?
I think that won't change too much. I think that doesn't have too much of an implication on it. See, what normally happens is, as an individual, if I want to invest in certain foreign securities through LRS, the money goes from my resident account in India. The LRS purposes are limited. S0001 is the purpose under which you remit money to any transaction which is allowed through LRS. Repeating it again, the maximum permissible limit through LRS for any resident individual still remains $2.5 lakh, $250,000. So anyway, you are transacting or you are converting your Indian rupees to a foreign currency within India itself first, and then that foreign currency goes through LRS to your foreign jurisdiction account. So I think the conversion cost and all those things still remains the same. The only benefit is that if you want to hedge against inflation, or you want to use that particular money for various products apart from equity, that's a great stuff which needs to be looked into from this particular notification. And I think that particular conversion cost and all that still remains the same. It depends upon your relationship with the banker of what spread you get while converting this particular Indian INR into the foreign currency through LRS, and use that particular foreign currency account for the various purposes. So I don't think so that has too much of an implication as far as the impact cost is concerned. But yes, what one can understand is, since now you can use this money beyond equities or other financial products, so the volume of transactions can move up. The banking sector might benefit also from having the fixed deposits now made through this particular account within the foreign currency denomination. And at the same time, even the insurance companies will benefit. So if you want to buy, say, for example, in life insurance, why not to buy a life insurance which is available in the foreign jurisdiction or in the IFSC through this particular account? So I think the benefits would be multifold. How it come up during the course of time is something to be seen, but it's a great move by the RBI to ensure that IFSC stands at par with the foreign jurisdictions, which is the intention of the government to make India also as a financial global hub.
Okay, makes sense. Thank you so much, Mr. Mathur, for joining us and explaining that to us. So you add more products by this move. You'll be able to transact in those products in different aspects as well. So that's how it would impact you and I when it comes to this change which has come in for GIFT IFSC as well. Thank you so much for joining us today. By the way, before we slip into a short break, you have to look at that some of these stocks, Oil India, which is up 11% now. There's been a sudden sharp surge that we are seeing on these stocks. All these production and exploration stocks are doing really well today. Something like an HOEC that is also into oil and gas production, that one is up around 7%. ONGC also has been higher since the start of the day. So watch out for these names, big moves that we've been seeing, and that continues to be the case as well. We'll slip into a short break. When we come back, we'll get you more on the stocks and market action. Stay tuned.